would be order types. Okay. Now we're going to get into market quotes. So you've got the bid and the ask price. The bid, the definition is right there. Okay. The highest amount someone is currently willing to pay for the security. And the ask price is the highest amount, or excuse me, the lowest amount someone is willing to sell their security for. Okay, so there's a bid and an ask, and it always goes bid and then ask. All right, so I'm going to go ahead and I'll explain it a little bit more. I just want to get to the next slide where it shows both. Okay, so the bid and the ask, what those are, it's basically just limit orders. People have put in a limit order saying, hey, I'll buy BCO for $42. And then you've got somebody else who's saying, well, you know what, I'll sell my BCO stock for $42.5. Okay. So neither of those orders are getting filled yet because they're mismatched, right? Somebody's willing to buy it at 42, somebody's willing to sell it at 42.5. So we're kind of at an impasse. All right. If you, the investor, go in and enter in a market order, which price are you going to get? The bid or the ask? Well, it depends if you're buying or selling. The way that you want to think about this is if you go in to enter in a market order, then you are going to always get screwed. Okay. So you're always going to buy it at the higher price. You're always going to sell it at the lower price. Okay. So in this case, if I go ahead and place a market order to buy BCO, well, the buyer, excuse me, the person entering the order is always going to get the short end of the stick. So 42.5 is what I buy it at. If I go to sell it, 42 is what I'm going to sell it at. Okay. So they'll probably give you a question where they're going to ask you, if you're an investor and you go to place a trade, where are you buying it at, the bid or the ask? All right. So if you're the outside investor going in, you're just placing a market order, excuse me, then you would get it at the higher price if you're buying, lower price if you're selling. So just think you're always getting screwed. Okay. If you are instead the market maker, okay, or the person entering the limit order, you're on the other side of the transaction. Okay. So they get the better price. Okay. So that's how that works. All right. Now, the difference between the bid and the ask, we call that the spread. Okay. So you'll see BCO here has a spread of 50 cents versus MGS, which has a spread of 2 cents. You want a lower spread. A lower spread means that there's more buyers and sellers on the contract. Okay. So the lower the spread, the more liquid the security is. Okay. So make sure you know that. You always want to be wary of any stock that's got a wide spread. Probably means that there aren't a lot of people trading it, so you might have some liquidity concerns. Okay. Most stocks that trade on an exchange should have a very tight spread, especially a stock that trades quite frequently. Okay. So Facebook, the spread is probably a penny or 2 pennies. Okay. All right. So that's bid and ask. Any questions on that? Okay.